Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're all well, and I hope you're all enjoying your weekend. Pips of Persia here, coming to you with another weekly market outlook video, preparing you for the trading week of 27th of May 2019 to 2nd of June 2019. Before we get started, as usual, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk, therefore never risk more than what you're willing to lose. Past profits do not guarantee future results. Goes without saying, please do screenshots or save the analysis that you kind of agree with. If your analysis is different to mine in any way, please stick to your own analysis and judge your executions based on your own analysis. That's the best way for you guys to learn. Without further ado, let's go ahead and get started. The main focus for my trading style for the next week is going to be kind of purely technical. Meaning what? Meaning I'm not going to really pay much attention to any of the fundamentals coming out. I'm not going to count on them to drive my technical analysis to a certain direction, if that makes sense. I'm purely just going to keep an eye on the Forex factory to make sure my trades are safe against the high impact news coming out this week. If the markets do open with a certain gap, I will be covering that on my Telegram. I will be sending an update video on my Telegram channel. I'll leave the link in the description for you guys to be able to join the Telegram. But yeah, just keep an eye on Forex Factory and make sure your trades are safe against all of the high impact news that are coming out. The only kind of news that you might want to keep an eye on would be the Canadian dollar on Wednesday at 3 p.m. UK time. That would definitely be a good idea to keep an eye on that and read some of the related articles that will be released by then. Now, the analysis for the Australian dollar pairs are quite similar to what we had kind of the past week. If you guys remember, I mentioned that the move that we are expecting to happen across the Australian dollar pairs might not happen. The trading week that we just had, it might be happening this week or next week, because that demand zone that we have drawn at the bottom over here, and then the next few analyses are going to be very, very similar to each other. That demand zone needs to get tapped off very clean for me to be able to take some entries based on that. So AUD CAD, very, very simple on the 4-hour time frame. I'm waiting for a final push down to reject this weekly demand zone. Give me a very nice 4-hour divergence, 4-hour closure for me to be able to enter based on that. It does look as though that push to the upside will be giving us the divergence, meaning what? Or convergence rather. By the time this market reaches my kind of demand zone down there, most likely the MACD wouldn't be following as quickly, and most likely some sort of a convergence will be created, confirming the buy entry at that given zone. So I will be looking for some long opportunities alongside of majority of the Australian dollar pairs, provided the demand zone that we have drawn on the weekly or daily time frame gets rejected. Same story with Australian dollar versus Swiss franc. The demand zone that we have drawn is kind of around 0.688 round number. I'm still going to be waiting for some sort of divergence to be created. Actually, in this case, the divergence has already kind of been created. One final push down for the 0.688 to be tapped off, then I will assume some buy positions around that price for Australian dollar versus Swiss franc. Australian dollar versus the Japanese yen. On a daily time frame, we've actually rejected this previous daily lowest closure over here. I've kind of taken that wick out of my analysis, and I'm just working with the kind of lowest closure. So marking that up, I can see that the market has rejected that twice. Once the Friday that, not the Friday that just passed, the one before that, and once this Friday. So we do have that rejection as well. So I do believe we would be looking at some long opportunities for Australian dollar versus the Japanese yen to kick in. This would be a very nice trade to take to the upside. Australian dollar versus US dollar, same story, weekly time frame. The zone that I have marked up, or the price that I'm looking at rather, is 0.684 round number. Reason why I have my kind of eye on that price is this previous reversals that has taken place at that price, right over there. I do believe we can get another push down. We can get another push down for that, for the divergence to be created, number one, from that point. Okay, if I zoom in a little bit, the divergence or convergence rather to be created from this point on MACD and on the chart. to around this point, okay, for the market to create a low MACD to stay higher, converging towards each other for the long opportunities to come in. 0.684 will be my execution zone. This could be a very nice move to the upside. Canadian dollar versus Japanese yen, again, identical to last week. We are just patiently waiting for that demand zone across all of these different pairs to be tapped off and to be rejected for us to be able to take our entries based on that. This is a daily time frame on Canadian dollar versus the Japanese yen. We can see previous major reversals that have taken place at that given price, okay? So expect another rejection off of that price for the long opportunities to kick in. Euro versus the Australian dollar. We are waiting for a supply zone in this case. Again, at the end of the day, this is an Australian dollar pair, and they will be moving quite similar to each other, provided the other demand zones get tapped off. I would expect this supply zone to be tapped off over here as well. Provided that doesn't happen, I do have this kind of counter trend line in place over here. I would be expecting kind of a break and retest of this trend line. However, before this zone, right over here, before this zone is broken to the downside, we are still in an uptrend, okay, on a 4-hour time frame. Unless I get a clear break and retest of this zone, okay, I would have to look at the chart as if it's an uptrend, and I don't want to be trading against the trend. So we will either get a push up to tap off the supply zone, or a break and retest of the trend line, followed by a break and retest of the zone for us to be able to execute some short positions based on those. Euro versus Canadian dollar, one of the currency pairs that we've kind of been stalking for a few weeks, again, patiently waiting for this trade setup to come to us. Remember what I said before, that on a daily time frame, this head and shoulder formation is completely valid, okay? So we were either waiting for a break and retest of the neckline to enter, or a potential push up to the marked zones. So, very simple, 4-hour time frame, you can see where I've clearly marked up my previous reversal zones, where these will be my potential sell executions. However, there are definitely two other confirmations that I would have to see at the reversal zone before I execute any trade. And those two confirmations would have to be, I would have to see divergence on my MACD when the market makes its way up here or here. And I would have to get a very clear bearish price action, bearish candlestick formation for me to enter. If I don't have those two confirmations, I will not be entering sell positions. Very, very simple, very, very straightforward. Euro versus the British pound. Euro versus the British pound. On a 4-hour time frame, I have marked this double bottom zone over here from closure to closure. The idea behind a double bottom zone is that the market, or double top, is that the market will make a high after the double bottom the same size as where that U was created. And by the U, I mean this inverted general U that was created over here. Take the number of pips, take the measured moves, put it up there. That will be the final take profit for that double bottom zone, if that makes sense, okay? So that will mean one final push up for Euro versus pound. We are within this Fibonacci level as well, 61.8 to 71%. Provided I get another push up, I would assume Monday and Tuesday, maybe even Wednesday, will make our way to satisfy the double bottom, and the continuation to the downside will continue after that. But this could be a very nice trade setup, very low risk-reward ratio trade setup, something that I'll definitely be keeping an eye on. Euro versus New Zealand dollar. This was covered on my Tradingview channel, where we were looking at this at the high of the previous wick for us to be able to take some sell entries based on that. And it rejected that high very, very nicely, and we did get a very nice kind of decline to the downside. Okay, roughly about 80, 90 to 100 pips, depending on your entries. We did get that decline. On a daily time frame, yes, on a daily time frame, we can see clearly that that bearish momentum has started. We've got a bearish engulfing over there, which was followed through as well. Okay, so there are two scenarios that I'm kind of waiting for right now for Euro New Zealand dollar. Number one scenario is your standard pullback, your standard retracement, then potential sell. But a more safe re-entry position for Euro versus New Zealand dollar would be a break and retest of this trend line drawn over here. Okay, this is on a 4-hour time frame. The trend line has been rejected twice in the past, or respected twice in the past. Once over here and second time over here. So you can wait for a break and retest of the trend line as well before you go ahead and execute some sell positions. Euro versus US dollar. Very, very simple, straightforward 4-hour setup that I have for Euro USD, where we are coming up to reject that trend line for a third time. That will be a third touch of the trend line. The third touch of the trend line, majority of the times, are the touch that you would want to go ahead and enter based on that. Okay, the rejection for the third time off a trend line would be the best rejection, if that makes sense. That is also lining up with your key fib level as well, being the 61.8 to the 71%. We are currently in that fib region. Provided I get a push up to reject that trend line and I get price action on the 4-hour, or in this case hourly time frame, I will be executing some sell positions on Euro versus the US dollar. Pound versus Australian dollar. Daily time frame, what we can see for pound Australian is this trend line in the past that we've been speaking about it, since we have gotten a rejection up there. Second rejection off of the trend line over there. Third rejection or fourth rejection off the trend line, break and retest of the trend line. Okay, in this specific case, on a 4-hour time frame, I'm waiting for either a break or a bounce scenario. A bounce scenario would be from this previous reversal zone that I have marked up over here. The market has rejected it, and this does line up with the larger scale Fibonacci from this low over here to that high. Okay, retracing down to the 71% level for the potential move to the upside. Provided I break below this zone, and not only that, break below the trend line that I have drawn over here, I will be looking for some sell entries. If we break below. And by break, I mean in this case a daily closure. I would like to see a daily time frame closure below those trend lines. Pound versus Canadian dollar on a daily time frame. This is exactly what we were speaking about in our previous video, where our buy position was a little bit higher. The market ended up coming a little bit lower, but still rejecting all of the trend lines that we have drawn. The larger scale trend line over there for a break and retest scenario. And on a daily time frame, we actually closed as a hammer formation over there. And this is a clear 3-pin formation. The price is rounding up, ready to make its way up. So wait for a potential pullback and entries for a buy position. Okay, in this specific case, I'm just going to wait until about Wednesday and see what entry positions the market is providing me with. Any sort of pullback, any sort of price action that I receive, I will be willing to buy into pound versus Canadian dollar. Pound New Zealand dollar, we finally ended up breaking below the trend line that we've been speaking about. That trend line over there. Okay. First touch, second touch, third touch, break. What we are waiting for right now is a retest. Wait for the retest of the trend line, which will line up with your fib level, which will be a tap off of this trend line over here as well, of this counter trend line rather. So wait for that pullback, wait for that move to be satisfied Monday, Tuesday, Wednesday. Potentially around Wednesday, Thursday, we would be able to execute some sell positions for pound New Zealand, provided it makes its way up to the key zone, the key fib level. The trend line and the broken through trend line as well, in a sense. Provided you get price action along those zones, you can go ahead and execute some sell positions. Oil has been another another kind of setup that I have been following. I did post this on my Telegram, but in terms of what I currently can see for oil, is that we have clearly rejected this zone over here. Okay, very clear rejection. I do believe we can make our way up to this next zone right over here. The price will be somewhere around 60.3 for oil. If I get a nice price action rejection around that zone, I will be looking for some sell entries. But I would like to see a further push up into my fib level, Fibonacci drawn from that high to this low. I would like to see a further push up within the to bring us within the fib zone, fib levels, to reject this broken through bearish flag formation as well, give us a nice bearish price action, and for the sell positions to continue coming in. Provided we get a push up, expect some sort of like a wave movement, a 1 to 2 to 3 to 4 to 5 move down to the minus 27. This could be a very nice currency pair to trade, very nice setup to follow for this week. However, do bear in mind that with some brokers, the pip calculation for oil or the contract sizes are different. Therefore, you would have to adjust your risk based on the contract size. Gold on the 1 hour time frame, what I can see for gold is this general inverted head and shoulder formation that we had previously over here. Left shoulder being there, head being over there, and that's my right shoulder. This general inverted head and shoulder looks satisfied to me, but that could be a start of a trend reversal. We did get this kind of bearish flag formation with a 1 to 2 to 3 to 4 to 5 and a breakout move. So I would be expecting gold to continue its momentum to the upside. That's my measured move over there. So I would be expecting 1294 to be tapped off for gold sometime this week or next week. Could be a very nice kind of buy opportunity. Would be a 100 pip move to the upside. Definitely something that I will be keeping an eye on. These are practically the majority of the setups I have an eye on for this week. Goes without saying, if my attitude changes about any of these setups, or if the market opens with any gaps, I will be updating my Telegram channel. I will be sending setups over there, or my Tradingview profile. I will be sending another video over there if need be. For our private members as well, you will be getting the signals this week for any of these currency pairs that go to perfection with your stop losses and take profits. So please do make sure to take notes, make sure to pause the video and take screenshots if you agree with the analysis. And let me know in the comment section down below if you disagree with the analysis or the pairs that you agree with as well. It would be great to see what you traders think as well. I normally wait for London or New York session on Monday. We do have bank holiday for pound this Monday, if I'm not mistaken. Yeah, pound and US dollar. So in this case, on Monday, I'm not really going to be doing much. I'm just going to be waiting for Tuesday to see how the London and New York overlap will be affecting these setups and reanalyze it then. For potential entries, and that's it for this week. Let me know if you guys have any questions. You can contact me on my Instagram at PipsOfPersia. I will be leaving the link in the description as well. Have an amazing trading week. Stick to your trading plan, stick to your correct risk management, and let's smash it. Let's catch some pips.